Nothing can stop me. I'm all the way up. All the way up. I'm all the way up. I'm all the way up. Nothing can stop me.
What is going on, superstars? It's Sam Keys here again. Welcome back to my channel. In my previous video, I did a thorough breakdown on how I trade volatility 705 index with my smartphone, and after that I shared a 15 seconds YouTube shorts on how I applied the same strategy to trade volatility 50 index. With this strategy, I sent a trade signal on my Telegram channel, and that gave us all take profits within 15 minutes. As you can see, that left members of my community happy and thankful for the profits they made. After that, I got a lot of responses and requests to do a full video on this topic. So in this video, you're going to learn my favorite Deriv killer strategy, which gives 300 to 1,200 pips on volatility 705 index within 15 minutes. And I'll show you how to apply this same strategy to get sniper entries on volatility 50 index. If you use this strategy consistently, you will be able to grow your account from as little as $25 to over $1,000 really fast. To get the very best from this video, I recommend you watch till the end and pay a close attention to every detail. In case you miss any part, you can always rewind and watch again. Before we get started, if you'd like to see more of my videos on volatility indices, please like this video, subscribe, and hit the bell icon. Also, let me know in the comments your name and where you're watching this video from. With all that said, let's get started. With over 20 years of experience, Deriv is one of the world's simplest, flexible, and most reliable broker for trading forex, commodities, stock, and synthetic indices. They give you 24/7 trading, sharp prices, tight spread, and over 100 tradable assets. I trade with Deriv, and it has been a very exciting experience. The user-friendly platform makes it easy for beginners and advanced traders to carry out all operations. Click the link on the description of this video to create an account and start trading your favorite assets. Before I trade volatility 50 index and also volatility 75 index, what I want to do firstly is to take a look at price on the macro time frames. And oftentimes I start with the weekly time frame, then I go into the daily time frame, and after that I go into the H4 and down to the smaller time frames where I get my entry point. And what I really do on the higher time frame is to spot out levels where we're going to have price reversal. So I go into the charts and I identify levels that they're going to be what potential price reversals. And these levels tend to be zones of resistance and support, and also zones of supply and demand. So what I do next is just to identify those zones. And now I just want to spot out a zone of supply which we have in the market, and I do that with the rectangular tool. And as you can see the price got into this same zone, right? How did I pick that out? It's simple. I just got to the week of this previous week. Can you see this one here, the high of this candlestick? I took it as the low of my zone. Then I went on to this other one, the high of it. I took it as the high of the zone. So with that, you can see the price got into that same zone, and you can see that there was rejection. Another way you can do this is to identify the resistance levels that we have in price on these higher time frames. And the truth is, whenever price gets into this particular zones, there's going to be a reaction. So what you want to wait for is to let price to get into that zone. Then you take a look at the price action that you have there, and price action has to do with the kind of candlestick formations that you have when price gets into there. So to see what is really happening right now within the week, all I need to do is to take a look at price on the daily time frame. Now on the daily time frame, we have this structure in the market. We can see the price is creating an uptrend, and what I want to do next is to just put up the trend lines, right? To put up the trend lines by merging the highs and also the lows and get a particular pattern of the market. Now if you do this, you will be able to have an eagle's view on the market, waiting for price to get to that particular point where you've seen reversal in time past. And as you can see this, we can see the prices happening to go perpendicular and not parallel, just like when we're having some other setups where you have the lines, right, the trend lines creating some kind of a channel, right? Well, here we can see this kind of structure. So next thing you want to do is get into the price and look at it in the H4. In the H4, you get to see price movements, right? You're going to see price movement, and every of this point, if you're going to be taking your price within a day as a day trader, you definitely want to look at price on the H4 and the H1, and also spot out your support and resistance level in that time frame. So you can see that when we look at price on the H4, you get to see a clearer view of how this trend line should be placed, right? And that is what I do. I just go in here to do this technical analysis first before I get to bring in my indicators. All right, now let's just spot out the resistance and support lines that you have in price here. You can see that currently in the market, you can see prices around a support zone, right, which was formerly a resistance. I'm going to bring out this. You can see that at this point it was a resistance and also a resistance, but this time it was what it becomes a support, and now price is retesting it and looking out to break the support and to come all the way down to this particular trend line level, and that is what we're looking at for price. Now in the video that I shared, I actually took that entry on the 1 hour time frame, and I saw the support and resistance level and also the supply and demand zone on that time frame, right, on the 1 hour time frame. And I'm going to identify that quickly before we go over to see the indicators that I make use of to increase my confirmations before taking a trade. Okay, and besides that indicators, I'm also going to show you my special entry technique for taking sniper entries with this video. Okay, now you can see that I've spotted out that zone in the market, right? How did I get that? Just look at for a week, right, where you had a pin bar. Can you see that I had a pin bar right here before? There was a pin bar here, and that gave me an indication. It gave me a huge indication that, okay, there's definitely going to be a reversal. Another level where you could bring out as a supply level is taking the high of the spin bar and also the high of the spin bar. Let's just move this channel upwards. You can see the high of the first spin bar, we have it as the low of the zone. Then the high of the other one, have it as the high. So you can see that price got into this point. Price got into the zone and that rejection started, and also it went down, then come to retest at this point. Now I'm going to show you how to apply every of these things. It's not about the strategy, it's about how you truly apply it. And when you combine the set of indicators and price action, you become absolutely limitless. Now on the charts, I have the set of indicators that I use for my Deriv killer strategy, right? And I want to show you the parameters or the settings for these indicators, and I'm also going to show you the conditions that you want to look out for to make use of this particular strategy, right, and the indicators. And with that, we're going to backtest, and I'm going to show you my entry technique for taking sniper entries. Now let's look at the settings of the indicators. Now, this strategy requires 3 indicator windows. The first indicator window contains the relative strength index, and the settings for that relative strength index is period 14, style 3 pixel, level 9010. The next indicator window contains the relative strength index as a background, and that is period 1, and we have the style 3 pixel and the level 90 and 10. Now, the next indicator on this indicator window is the moving average with period 50, and we have the method simple, and we have the style 3 pixel red, and the level is untouched. Now we have the next one, which is period 2, and everything the same, but you have the style 3 pixel green. And the next one is period 3, everything the same, but the style 3 pixel brown. And finally, we have the fourth moving average, which is period 5. All things remain the same, and we have the style 3 pixel black. Now, the final indicator window contains the commodity channel index. And on this commodity channel index, we're going to be making use of period 14. And you're going to apply into what? Typical high, low, close, /3. And we have the style 3 pixel. I'm going to put this 3 pixel black. Now, the levels is what I want you to pay very close attention to. The levels we're going to be having minus 240. Just take a look at everything you have on my screen, and then you replicate it, you put it on your own indicator settings, and then you save it. Now with every of these things done, we're good to go. Just go back to the charts, and we're going to see the conditions for making use of this strategy. To get a sniper entry making use of this indicator setup, we're going to be looking at price on the 5 minutes time frame. And on the 5 minutes time frame, we're going to look out for the conditions to take this trade. Also, you can apply this strategy on the 1 minute time frame. So I'm just going to show you the variation, that is when you use it for the 5 minutes time frame, and also when you use it for the 1 minute time frame, the things that you're going to be looking out for. Okay, so on the 5 minutes time frame, we're going to be looking at this. What I want to look out for is, number one, I want to see on the RSI I want to see divergence of price. On the main chart, you can see that we have price going long at this point here. I just want to backtest the strategy already. You see price is going long and creating higher highs, but on the RSI window, you can see that price is creating lower highs right here. So that's the first thing, which is the divergence. Then the second thing I want to take a look at is for price to hit the 90 level of the second indicator window, right? The RSI right here, we have price hit the 90 level, and also we need to see convergence of every of these moving averages at that 90 level. You can see that the 50 moving average hasn't gotten there yet. Now, what zoom level? It's important you understand the zoom level. I'm going to be making use of zoom level 1. Okay, now the 50 moving average has not gotten to that point. Now, if you take a look at this particular setup on the 1 minute time frame, you're going to see that every of them converged at that point. And the 1 minute time frame is the perfect time frame you want to use to get into this trade. So let's zoom in, zoom 1. You can see that every of the things there, they're convergent, right? You can see convergence there. And let me just open this up. I'm not making use of this, so I'm going to open this up. So let's go back to take a look at it. You can see the moving averages are converging up there, and that is what you're looking at for. Now, after you see that convergence, let me bring up my crossbar. You can see that there's that convergence right here. After you see that convergence, there's one other thing you want to take a look at. You want the moving averages, the smaller moving averages, to cross. Can you see that? We want them to cross the moving average 50 on this particular time frame. After that cross, then there's an indication that momentum is changing from the upward direction to the downward direction. And finally, we have the CCI. Price has to be on the sell or the strong sell level for you to get into this trade, right? And also you can see that the CCI is equally giving us some indication, which is divergence, right? The CCI is giving us divergence, just as the RSI window, just as we have the divergence here. You can see the same thing applied here. Now, this is an ideal setup, and what I use this strategy for is just to spot out zones where there's going to be potential reversal. And once that reversal zone has been reached by price, I just want to bring up these indicators to see if there has been a shift of momentum. And once I see the shift of momentum, I'm just going to go into the trade. So if you want to backtest this, you're going to see this happen over and over and over again. But I'm just going to save us some time, and I'm going to go over to show you my entry technique, the things that I look at for to place that entry. And that is what gave me a whole number of pips. Let's look at price on this time frame on the H1, so that you're going to see the move that we actually took on this trade, and we're going to measure up the amount of pips that we got from it. I'm just going to adjust every of this down. Just keep watching. I have something I want to show you, and make sure you don't skip any part of this video. Okay, just pay very close attention to everything. Right now you're doing very well. Okay, now I want to show you the number of pips that we got from here. Look at this. We have price taken up from up here and down to this point, right? 244 was the point that I was looking at for. You can see 244 was my third take profit on that particular trade, and you can see the price did about 2 pipettes. Now, 2 pipettes making use of the 3.00 lot size would give you $6. Now, if you're taking this trade and we had just a very little lot risk, we had a little risk of, let's say, about 5 mini pipettes, right? You're going to see that that particular trade is going to give you a lot of profit. And if you're taking this trade and you want to risk 1 pipette, you can use a very good lot size. And so long you stay within your risk management, that's really going to be good for you. Okay, now I'm going to show you my technique for entering this trade and also getting this particular setup here. Look at this, guys. I didn't call this out, but I actually got it. How you can get this particular setup that's going to take you down to this point, right? I'm going to show you that entry technique right now. So if you have watched this video to this point, I really want to congratulate you now, and I want to give you a free gift. Check the description of this video to get link to my Telegram platform, and in there you're going to get a free resource that I will be dropping, and also every day I get to share my trade ideas, and we'll have the people in my community get to take those free trade setups. Okay, and also if you're watching and you've not subscribed yet, you want to hit the subscribe button now, and also turn on notifications by hitting the bell icon. Now I want to show you how you can get into this trade trade and bank a lot of pips, right? A lot of pipettes, because when we're trading volatility 50 index, you're looking at pipettes, right? Good. Now, I want to see how you can get from this point to the point down here. Now, I'm not going to be using any indicator here, so it's going to be absolutely price action. So as well as you're using a set of indicators in your trading and you have a bunch of indicators, it's important that you understand price action very well. At the beginning of this video, I did a thorough analysis using price action with no indicators in it. So I'm going to show you how you can get that. Now, look at this. On the 1 hour time frame, we want to spot out two zones. Just like I started this video, I showed you that the first zone of supply is right here, and this next zone of supply is up here. So if you're taking this trade, you may be coming in at this point, but your risk, look at this, your risk is going to be above this second zone. So you're going to be getting in, let's say around here or anywhere around here, and your risk is going to be up here. You can see using a risk of 2 pipettes to get a potential profit of, can you see this? 9 pipettes to 10 pipettes. That is about a risk to reward of 1:5. That is a risk to reward of 1:5, and that's what I'm talking about. You're risking, if you're getting in at this low here, let me show you that quickly. If you're getting in to the trade at this low here, at this level, just at the commencement of this particular zone, you're going to put in your risk above the next zone, above the next level. Now you can see that we risk just 2 pipette, and if you're holding this position for quite a long time, you're going to be banking about 10 pipettes, which is equivalent to 1 pip. And you can see that that will be giving you about $30 using the 3.00 lot size, and your risk is going to be just $6. So you're risking $6 to get what? $30. Let me show you. Let's just mark up those zones quickly. Your risk is above here, and your entry point is right here. Take a look at this. Your entry point is right here, and your take profit is right here. You can see around this zone. So how are you going to spot out this take profit zone? How are you going to identify it? How I would identify this take profit zone is simple. I'm going to look at where there was rejection before. So I'm going to spot out that zone as a level of what? Of demand. So how I'm going to put that? I'm going to come in here. I'm going to pick out 2. Look at this. This first candlestick that gave it some kind of pin bar. I'm going to pick the low of it. And I'm also going to pick the low of this other one, right? This particular pin bar here. I'm going to pick out the low just to get us the very low point of it. So I'm going to see this zone as a zone where there's going to be buyers coming in to, create orders. So we have this zone as the demand zone, and we have this as the supply zone. So you can see I have identified every of these things. Getting price from here and risking just 2 pipettes to get 10 pipettes, that is a very good risk to reward ratio, right? And it's a very good trade. And these are the kind of things that you want to do. You want to get this kind of setups, and over and over and again, you want to try it out and make some good profits for yourself. Now, you may be wondering why in this video I calculated price movement in terms of pipette rather than in terms of pip. That is because it takes a whole longer time for price to make 1 pip. You can see it takes several hours for price to make 1 pip on this particular asset. And also, the minimum lot size available to trade this asset is the 3 standard, which is $30 per pip or $3 per pipette. To calculate pips on volatility 50 index, all you need to do is to observe the number of digits we have on the price quote. Volatility 50 has 3 digits before the decimal point. The second digit before the decimal point is the pip position, while the digit right before the decimal point is the pipette position, which is 1/10 of the pip. If price moves from 243 to 233, price has moved 1 pip or 10 pipettes. And if price moves from 243 to 242, then price has moved 1 pipette. I hope you got huge value from this video. Please try out this strategy on your demo at first, then comment below how this strategy works for you. Check out this video right here to learn about my price action strategy for volatility 705 index, and also this other video right here. Thank you for watching. My name is Sam Keys, and I'm always here to help.
Nothing can stop me. I'm all the way up. All the way up.